Ladies and gentlemen, good day and welcome to Goldiam International Q4 FY'24 earnings conference call hosted by Monarch Networth Capital Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rahul Dani from Monarch Networth Capital Limited. Thank you, and over to you, Mr. Dani. Please go ahead.
Thank you. Good afternoon, everyone. On behalf of Monarch Networth Capital, we're delighted to host the senior management of Goldiam International. We have with us Mr. Rashesh Bansali, Executive Chairman, and Anmol Bansali, Managing Director of the company. We will start the call with the opening remarks from Rashesh, sir, and then we move to Q&A. Thank you, and over to you, sir.
Thank you, Rahul. Hello, everybody. On behalf of Goldiam International, we welcome you all to our Q4 FY'24 earnings call. This has been a remarkable year for Goldiam. Despite starting off with an 11% decline in the first quarter, we have ended the year with a full year growth of 13% and a quarterly growth of 10%. This achievement is a testament to the hard work and initiatives taken by us to drive growth and profitability. For the quarter, our revenue grew by 12% year-on-year to rupees 1,513 million, while EBITDA increased by 21% year-on-year to rupees 274 million. Our margin stood at 18.1%, reflecting a growth of 140 basis points year-on-year. PAT was rupees 178 million, marking a 10% growth here. Throughout the year, we have focused on improving the contribution from our lab-grown diamond jewelry segment. We are pleased to announce that this segment now represents 49% of our revenue, up from 21% in the year FY'23, the previous year. For the quarter, lab-grown diamonds contributed 54% compared to 23% year-on-year. A significant achievement for Goldiam has been our ability to improve our inventory position, thereby enhancing our working capital cycle. We have kept pace with the latest trends and created a niche in our customers' mindsets with our unique offerings. Despite concerns about falling lab-grown diamond prices, our strength in offering higher caratage and converting it into high-end jewelry has led to stable margins for the company. Our niche remains in design, and we believe that the margin profile in lab-grown diamonds will remain healthy. As on March 31st, 2024, we had an order book of 120 crores. During May, we received 2 additional export orders of 30 crores each, totaling to 60 crores. We will execute these orders also within the next 3 months. As lab-grown diamonds continue to gain traction in the US, we are rapidly expanding our footprint in other geographies as well. FY'25 marks a new era for Goldiam as we launch our retail operations for lab-grown diamonds in the domestic market under the brand ERA. We have tirelessly worked towards this goal and have appointed Mr. Abhinav Kumar, an industry expert with a rich pedigree, as President of India Retail for Goldiam and for ERA. We plan to have our first few stores up and running by Q3 FY'25 in time for the festive season and aim to become the largest retailer of lab-grown diamond jewelry in our country. Lab-grown diamonds offer an attractive value proposition, and combined with Goldiam's unique design capabilities, we remain extremely optimistic about the domestic market. This pricing strategy provides a great product for the first-time and value buyers who have typically been exposed to inferior quality alternatives like zirconias and Swarovski. Overall, we remain extremely optimistic about the years ahead for both natural and lab-grown diamonds. With these, I close my opening remarks. Thank you very much for joining.
Shall we begin with the Q&A?
Yes, absolutely.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Dixit Doshi with Whitestone Financial Advisors Private Limited. Please go ahead.
Yeah, good evening, sir. Thank you for the opportunity. sir, in the inventory that we have, so I suppose we grow and use our own the diamonds that we grow ourselves, and we also buy lab-grown diamonds from outside. So when we record inventories, because we have been reading in papers that lab-grown prices, the diamond prices have been decreasing recently. So do you have to mark down the inventory?
Hi, Mr. Dixit, how are you? Yes, we do mark down the inventory as and when we believe that we are buying at a much differential price. So even in the third quarter, and as you see the margin in the third quarter, in the standalone, you'll see it is down. That's because a huge inventory markdown has happened, and Goldiam, as a prudent company, right, works on inventory at cost or market price, whichever is less. So we have taken a markdown in the inventory to ensure that the as per current pricing of purchase or growth of lab-grown diamonds.
Okay, sir. And this 120 crore order book was as of 31st March 24, and another 60 crore order that we received. So total, it would be like 180 crore order book, which has to be executed in Q1, is it? Q1, Q2.
Trying to execute all of that in Q1, but the last 60 crores we have just received in the last 10 days, and our delivery time for that is in another 3 months. So maybe there might be some spillage over to the next quarter.
Okay. And if you can give us some metrics about the stores that we are planning in India, how big the stores would be, what could be the capex per store or inventory, how much?
Absolutely, Mr. Dixit. Is Anmol online?
Yes, I'm here.
Anmol, I would like to introduce Anmol and let him answer these details.
Thank you for your question. We're planning a store capex for malls around 2.5 crore. That includes about 1.8 to 1.9 crore in inventory, and the balance between build-out costs plus the rental deposit. For high street stores, we're planning a store capex of 3.2 to 3.5 crores, depending on size of store available, location, etc., where inventory will be about 2.7 to 2.8 crores, with the balance being build-out plus deposit costs. So we'll be having a mix of mall as well as high street stores, depending on location and favorable mix available.
Okay. And if recently DB has also slashed prices of CVD, so do you have any view on the pricing because it impacts its impact on the demand in itself, because consumers generally get concerned when but the prices decline so rapidly.
Right. So I would request you to differentiate in the news articles and in the media between the B2B wholesale prices as well as the consumer prices. So most of the reporting is now related to consumer prices, and of course that is going to be an ongoing situation because retailers have not passed on as much of the cost benefit as they've received from the B2B trade side. So for us, we have been seeing price stability for quite a while now. Unfortunately, the media is commenting more on B2C and consumer prices. Therefore, I would request you to please see that angle. In light of consumer demand, at the moment, we see no change. And, I think the trend of lab grown still continues to be very, very strong. And most consumers in the price brackets that we service are trending increasingly to purchasing lab-grown diamonds.
And my last question, sir. We entered a few markets outside US also. So how has been the response in these new geographies?
So response has been very positive. We are growing our accounts. We have basically introduced our products in little bit in Middle East as well as in certain countries in Europe. And in both of these regions also, lab grown has also started selling through.
Okay, thank you. Thank you and all the best.
Thank you.
Thank you, Mr. Doshi.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. Next question comes from the line of Bhavesh Vahwan with Aditya Birla Money. Please go ahead.
Hi, sir. My question was regarding this price falls in lab-grown diamond. Since, sir, it is artificially made, can it happen that, you guys, over time, over the next 2-3 years, we might see a further 40-50% fall, until, like nearing cost plus some profit margin, at that levels?
So, thank you, Mr. Bhavesh. So just I'll address that question first and then open it up to our chairman as well. We believe the B2B prices up to a certain size, which is really what is the commercial sizes that sell in the US and across the world, have reached a stable bottom. We, as growers ourselves, we don't see very, massive declines coming ahead, and we believe this is really the low point in terms of prices. Cost plus model is already being followed and has been being followed in the lab-grown diamond growing side for quite a while now. And I would say the certain hard costs, like actually the labor required to cut and polish rough diamonds into polished diamonds to be used in jewelry purposes, that does not change regardless of the material. So we believe that we are at a very good base and a very strong base, and have been for the last few months, up to the, about 3 to 4 carats of polished diamond size. I'll open it up to our chairman if he wants to add any further comments on the thing.
Mr. Bhavesh, I think Anmol, Managing Director, has answered this, absolutely to the T. I also would like to tell you that there's a certain cost involved of electricity, which is a lot, cutting and polishing, whether in Bombay, Surat, Ahmedabad, or wherever your factories are, right? And if you see all the costs involved, because human labor is still, there's a big part of it in cutting these diamonds. So we also believe that the fall will not be in this kind of a range anymore, and we've come almost to the bottom. So we are very happy that we are offering our retail offerings soon within the next 2 quarters, and where we can give to the consumers the price, the jewelry price at the absolutely correct market price.
Okay, that's helpful, sir. And my second question is on how the acceptability of this lab-grown diamond has been in US. Obviously, it's growing very fast, but any particular number that how it has grown over the last, let's say, 5 years or 3 years in US as an industry?
So as an industry, lab-grown diamonds have basically taken the US by storm. You have to understand it caters very well to a market, a middle-income market, who for a long time has not been able to afford solitaire-oriented and large diamonds. So lab-grown fits as the perfect midway segment for them to buy into this solitaire jewelry. As per the last report, we've seen lab-grown diamonds in unit sales have crossed 50% of the engagement ring market in the US. In value terms, it's still much lower. However, it's growing very rapidly. We believe in the segments we cater to and the retailers we cater to, it is going to be a predominant part of our sales as time progresses.
Okay, sir. Lastly, sir, apart from the US, which are the other nations who have taken very good acceptability of this product?
So US is the largest by far. It's also, of course, the largest jewelry market in general. We believe we see already some traction coming in Europe, and I think even domestically in India through private client sales we are seeing good traction. However, on a mass market scale, there at the moment is no other large region that has launched lab-grown diamonds.
Okay, sir. Thanks for answering my question. All the best.
Thank you so much.
Thank you, Mr. Bhavesh.
Thank you. Next question comes from the line of Bhavya Gandhi with Dalal and Broacha Stock Broking. Please go ahead.
Yeah, hi. Thank you for the opportunity and congratulations for the retail brand. A couple of questions from my end. Sir, if you can throw some light on the EBITDA and gross margin for LGD business for this quarter and on full year basis. Just wanted to know what has been the trend. Are we losing gross margins or EBITDA margins on LGD?
So, thank you for the question, Bhavya. On the EBITDA and gross margins for the LGD business, yes, for the quarter, it would be slightly more subdued as we have taken an inventory adjustment versus the full year. However, we do believe that we will maintain our margins and protect them as they have been in the past year as we move forward as well.
Okay. If you can indicatively provide what would be the absolute inventory hit that would have been taken in this quarter?
Let me get back to you on that separately, Mr. Babu.
Okay. And in the investor PPT, is the average realization that you mentioned, is it for the quarter or is it for the full year for natural and lab grown?
Right. It's for the quarter.
It's for the quarter. Okay.
Yes,
got it. And also, if you can just talk about the overall environment. I know you said that the prices are near rock bottom, but about the natural diamond, how has been the environment for natural diamonds? Because it still constitutes 50% of our revenue. Yeah.
Absolutely. So in general, we do believe that natural diamond jewelry will still remain a significant minority part of our sales. It will always be some significant portion of our sales. So yes, we are, of course, still very well invested in that industry. In terms of sales, we definitely see the trend continuing where customers are more and more increasingly moving bridal jewelry to lab grown because they want the benefit of a larger carat diamond and a large solitaire look. However, there is certain strength pockets for natural diamond jewelry, largely in the lower price points, where the difference between lab and natural diamond jewelry in terms of pricing is not that significant. Other than this, I'll open it up to our chairman if he wants to add any more comments related to the mined diamond and natural diamond market.
So, Bhavya, it's very important that all analysts understand that Goldiam's majority market is USA. And in USA, it's been very well accepted, the lab-grown diamonds. Mined diamonds also works with a certain segment of consumers out there, and which will continue to work. Again, a focus you have to understand is that US is, of course, the largest retailer for jewelry in the world, but there are other markets. China is one, Europe is another one, Australia is the other one, and I mean, diamond jewelry is sold all over the world. And in those areas, lab-grown diamond still has a very small share. I'm very hopeful and positive that this share will change, but currently it's only natural diamonds that sell over there. So the business of natural diamond is there and it will continue to be there, but Goldiam's ability and focus is customer-oriented. The customers of Goldiam are asking for more and more lab-grown diamonds, and that's what we are catering to.
Right. And the incremental 120 crore order that you received, that is completely LGD, and is it from new customers or from old customers?
Well, there's a mix. There are orders from newer customers here as well. So at least 10 to 12% will be completely new customers from this. And no, it's not completely LGD. It's a mix between LGD and natural, and the open order of 120 plus the new order, right, will have a mix of close to 65% LGD and the balance natural.
Okay, got it. And if you can share the wholesale rate for 1 carat LGD in the current market, average would also work.
Sorry, explain me the question again.
Yeah, 1 carat wholesale rate, I mean the cost of manufacturing and the wholesale rate for 1 carat LGD in the Indian markets.
Anmol, you want to take this?
So the wholesale rate, Bhavya, we can get back to you on. We would not want to share it also so publicly, but we can get back to you with those figures. And our cost of manufacturing is honestly pretty much the same as the current 1 carat B2B wholesale rate.
Okay, got it. And
that's also a result of a great reason why we have shifted a lot of our focus to distribution as against capex oriented into the growth of lab-grown machinery.
Got it. Fair enough. And if you can share, I mean, what sort of average selling price are we looking when it comes to retail? What invoice value are we targeting? And if you can throw some light on that.
Absolutely. So we are very excited for ERA retail to open up in Q3 this year. The retail entity and the brand will be focused on non-wedding day jewelry, which is modern jewelry retail, both within malls as well as high streets. We will have a significant mall-based presence, and we hope that we will, within the first year of operations and store launch itself, effectively in calendar year 2025, become the largest COCO lab-grown diamond jewelry retailer in India. Our average retail price that we're looking at, ballpark, is between the range of 45 to 55,000 rupees, which places us in, slots us right where modern mall-based jewelry retailers are currently selling in India today.
Right. Got it. I'll get back in the queue. Yeah.
Thank you.
Thank you. Next question comes from the line of Rashmi Sharma with Somerville. Please go ahead.
Hello, good evening, everyone. Hello, am I audible?
Not very well. So if you could.
Am I audible now?
This is slightly better. Yes.
Slightly better.
Yes. So my first question is, like over the past 3 years, sales have grown at a CAGR 14%, and profit has increased by 21%. So what is your guidance for the next 3 years?
I'd deflect this question to our chairman regarding revenue and profit guidance in the future.
Rashmi, thank you for your question. I think, as a company, we've always been conservative. We've been working towards more businesses that are more margin-oriented businesses. But you see, Goldiam's growth will continue the way you've been seeing it, and we'll be happy to maintain EBITDA margin that's close to 20-21%.
Okay, sir. So, sir, my next question is, regarding the brand exam, what revenue and margins can we expect from this brand? And secondly, which stage we will focus on and begin with the early stages?
So, thank you, Ms. Sharma. I couldn't get the second part of your question, but related to margins for the ERA brand, I would like to say that we are targeting this brand to be set up where break-even at revenue per store would be around 30 to 35 lakhs of monthly sales. So that's where we are targeting the ERA brand to be. Gross margins would be higher than our competitors who are large mall-based jewelers in our country. All of them are predominantly in natural diamond jewelry only. And because of us being in lab-grown diamond jewelry, we'll be able to get a certain gross margin higher than what they can achieve. And that's how we are trying to set up the ERA brand. I hope this answers the question.
Yes. My second question was that which stage will you focus on and begin with in the early stages?
Which states would we begin with? Is that the question?
Yes.
Yes. So we are targeting within the first 6 months to launch in 3 regions. The first one will be in Mumbai because it's the home city where our head office is based. We will also be targeting a launch in Bangalore and NCR, Delhi NCR.
Okay, sir. Thank you.
Thank you.
Thank you. Next question comes from the line of Pradeep Rawat with Yogya Capital. Please go ahead.
Hi, sir. Good evening, and thank you for the opportunity. So I have a couple of questions. First, do you see any kind of step up in competition for lab-grown diamonds, both in India as well as in the US?
Sure. Thank you, Mr. Pradeep. So on the B2B side, there's no step up in competition. It's always been there, and we believe because of our initiatives over the last few years, we have created a very strong presence as a dominant lab-grown diamond retail supplier to our large retailers. They know us and love us for what we can offer in this category. And given the tailwinds, it's helped us over the past few years. So not really a step up in competition, but what has been existing continues to exist for us, at least on the jewelry side of things. In India, there are a few on the retail side, more unorganized players who are cropping up in each major metro city. We believe we will be significantly differentiated from them in the way we are setting up our operations, be it, very professionalized and corporatized in terms of team building, getting the right people with the right experience in roles to, maximize our chance of success, as well as from the get-go, creating an omni-channel presence as well that can help us in succeeding on a nationwide scale in this venture.
Great. And with regard to strategy, we have one business of B2B and the other we are going to focus on retail. So
Yes.
going forward, where should be our incremental focus and resource to be allocated? Would it be more on B2B or would it be more on retail?
Right. Great question. So B2B, our business in the US, the way it's been set up is growing steadily on its own. The incremental requirement for cash is not very significant over there, especially as we have in the last few years transitioned to having a very significant .com or online sales percentage as a portion of our sales. Those are coming to us at negative working capital, so incrementally no capital is needed to grow the .com portion of the business. The idea for us is to, as a net cash company, as a zero debt company, and as a company that has significant cash flow coming out from the B2B operations every year, utilize these cash flows and our balance sheet strength to invest in a retail brand in India. And of course, we will do it prudently and judiciously, taking it step by step as and when the business merits further expansion.
Yes, sir. Just to follow up on that, so going forward in, let's say, 5 to 7 years, how many stores are you planning to open?
Okay, so Mr. Pradeep, that's a difficult question to answer. I think the vision is there. So some of our competitors in mall-based jewelry and modern jewelry have between 200 to 300 stores across the country already. There's no reason why we don't see, if lab-grown is proved successful, which we hope it will be in the domestic market, there might not be one, but multiple such retailers who can achieve that scale over the next 5 to 7 years. So our attempt will certainly be to, and our vision is to be amongst that one or two retailers who are able to scale up to that level over that time period. However, we will take it very judiciously and step by step, understanding what the business needs are, as well as understanding whether the operating metrics prove and require further expansion.
Great. Thank you, and all the best for your future endeavors. Thank you.
Thank you, Mr. Pradeep.
Thank you. Next question comes on the line of Yogesh Bhatia with Sequent Investments. Please go ahead.
Hello.
Hi, Mr. Bhatia.
Yeah, sir, actually I have two questions. One question is, can you give us some background of Mr. Abhinav, whom we recently appointed for the lab-grown diamond business and for the retail business basically? And my second question is, do we have any capacity constraint to produce these lab-grown diamonds as and when we need it for our store? Do we need to build up capacity, or we can, deliver it from outsourcing it from the market?
Sure. Thank you, Mr. Bhatia. So the first question was related to the background for Mr. Abhinav Kumar. He has joined us most recently from Melora, where he was head of offline business sales, predominantly focused on opening stores for Melora. Prior to that, he has long stints in experience with Urban Fashion, Aldo, being the head of Aldo for all of India, and prior to that within the Tanishq and Titan group of companies. Your second question related to whether we need to invest in CapEx to provide inventory into our stores. The answer is no. at the moment, given where prices are, there is really no incremental benefit in adding machinery. The B2B market prices are pretty much similar to the cost of growing diamonds yourself. So we'll be able to leverage our deep networks of sourcing lab-grown diamonds to help us create the inventory required for our jewelry retail business.
Okay. Thank you, sir. That should be all.
Thank you, Mr. Martin.
Thank you. Next question comes from the line of Sriram R with an individual investor. Please go ahead.
Thank you for the opportunity. I have two questions. First is, can you explain the distribution model of LGD and traditional diamonds? Like, who are your customers, etc. And then my second question is, what is the market size of LGD with respect to exports made out of India? How many players are there? And, what is the entry barrier in this business?
Sure. Thank you, Mr. Sriram. So the distribution model, let me explain it briefly regarding our B2B business, which is the crux of what we do today. We are OEM jewelry manufacturers for some of the largest US and now global retailers of fine jewelry. So that really comes, we service and we provide finished jewelry designed internally at Goldiam to some of these large retailers, namely companies like the Signet Group of Jewelers, which is the world's largest jewelry company, department stores in the US, wholesale clubs in the US, as well as mass market discount retailers as well. At Goldiam, we do not service the super luxury end of retailers, primarily because they have their own integrated factories. So that's our crux and the focus of our distribution model. We service all these retailers on two fronts. One is the jewelry that is in their stores, which we create, manufacture, and ship through our US office to their stores. And secondly is we also service their online websites. So their own .com websites, we list all of our products and a much larger SKU list of products. And as and when orders are received on a daily basis, we make custom jewelry and ship it within 5 to 10 business days to them. So that's our distribution model. It is truly the same for both natural diamond as well as lab-grown diamond jewelry. At Goldiam, we are, as we like to say, a jewelry OEM company. So in some sense, yes, we are stone agnostic. The market size, your second question regarding the market size of lab-grown diamonds. So I'll have to get back to you with absolute figures, but just directionally speaking, lab-grown has been growing very quickly. More than 50% of unit sales of engagement rings in the US in the past year has now come from lab-grown diamond jewelry sales. So this is a huge jump from 5 years ago where lab-grown diamonds, even in unit sales, was probably in single digits. Regarding absolute numbers, please let me get back to you off call and I'll try and pull those reports out on an industry level basis.
No, I'm just trying to understand how many players are there in India and what is the entry barrier in this business. I'm just trying to understand why somebody with money cannot replicate this model.
Absolutely.
So I would like to answer the one question is there are already in India there are 6,000 reactors growing, 6,000 machines growing such diamonds currently.
Yes. And for us, in terms of the differentiator or the moat, we truly believe and have always believed that it is only in distribution where differentiation lies and where margin lies. So the further we can integrate to our customers and become the end-all solution for them for lab-grown diamond jewelry, the better we'll be able to compete and define our moat even more. So an example of that is, of course, it's easy for somebody with significant capital to come in and grow diamonds, but then do you have the distribution to be able to cut them, to manufacture jewelry, to design jewelry, to be an entrant into large US listed retailers and then service them both in store as well as online. So that is a that component is a much bigger challenge, and it's in that distribution where margin as well as moat lies for us.
So you're saying that the traditional players who deal with gold will find it difficult to do this business. Is that what you're saying?
So, Mr. Sriram, just to define, in our industry, in the export business, there are no traditional players that deal with gold. Everybody, almost 100% of jewelry exports that leave our country is studded diamond jewelry. Whether it's lab grown or natural, it's all studded. So if you could define your question, maybe we could help.
Trying to understand that.
Sorry?
The non-studded part of gold that gets exported from our country is gold chains. But when you come to jewelry, it is only studded diamond jewelry, right, with either diamonds or cubic zirconia or any other color stones or lab-grown diamonds. It's only that gets exported as jewelry.
Okay. No. My question was the traditional players like the Titan and Kalyan,
you're talking about Indian retailers?
Correct.
Okay.
So, I mean, what differentiates us? I mean, if tomorrow if they were to get into our business, what would be our, differentiator?
So Anmol and me both will have different answers on this. But, for me, the most important thing is Titan definitely, Tanish wants to come into this business. I think it will be a boon for all of us as well, because it immediately validates lab-grown diamonds to the entire consumers in our country. Because today the consumer in our country is still understanding lab-grown diamonds, though I know the demand is there and we've been selling privately very well. But the minute Titan comes out, the trust factor on lab-grown diamonds is completely accepted and it moves further. And the cost of education for a new brand to the consumers reduces dramatically.
Yes. Okay. Thank you so much. All the best.
Thank you, Mr. Sriram.
Thank you. Next question comes from the line of Bhavya Gandhi with Dalal and Broacha.
Yeah, hi. Thanks for the second opportunity. Just wanted to know, you mentioned that we want to be the largest cocoa retail brand in LGD, right? And I assume that the nearest brand which is there out would be closer to 60-70 crores when it comes to cocoa sales. So are we targeting 60-70 crores for FY'25?
So thanks for the question, Bhavya. I was mentioning that in terms of number of stalls. As per the data we have within our plan of calendar year 2025, the minimum stalls we would be launching is 15, and that would automatically make us the largest cocoa lab-grown diamond jewelry retailer in India. And of course, from there, based on performance and the sales figures and operating the stores to a certain level, we'll be taking further capital allocation calls.
You mentioned 15 stores in calendar year FY'25. That is by 3Q itself you are planning to open 15 stores?
Calendar year 2025.
Yeah, okay, got it. I mean, that would be 3Q FY'24, 25,
onwards.
Right?
Onwards.
Okay,
from that time onwards.
Okay. And is it possible for you to share what revenue per store are we looking at?
Right. So I mentioned on the call, Mr. Bhavya, that our target revenues for break-even are between 30 to 35 lakhs in terms of monthly sales per store.
Okay, break-even. Okay, got it. And with respect to your brand, what would be the brand strategy? I know you mentioned that you are looking at non-wedding jewelry, but say for example, if there's an Aditya Birla Jiva store, what value proposition we will have, from a consumer standpoint, why will we choose ERA over some other brand? Senco is also, sort of getting into lab-grown diamond. So if you can throw some light on that.
So the non-wedding day jewelry market, or in other terms, the modern jewelry market in India, is predominantly centered around our largest omni-channel players who have started rapidly expanding stores in the last half decade or decade. So, they are in the range of between 150 to 280 stores. and their average sales prices are in that range of 35 to 50,000 rupees per ticket. We believe that at this price point, given where gold is currently, the consumer is almost has to downtrend in terms of the amount of diamonds that they can enjoy. Now that problem is solved by transitioning within that same ticket price to lab-grown diamonds. So the entire value proposition is to tell the consumer and to educate the customer that at the same price and at the same budget of spending within these modern jewelry retail stores, you will enjoy 4 times, if not more, the diamond content that you otherwise would enjoy. So again, we'll be focusing on providing trust in terms of certifications from labs like IGI, etc., and creating ourselves to be the predominant fine jewelry retailer in the lab-grown space in modern jewelry retail.
Got it. And also, can you throw some light on the return or the exchange policy? Because largely people, prefer return or exchange policy because it incentivizes them to buy.
Sure. Thank you, Bhavya. We are currently in the process of benchmarking to competition and putting that all down in paper. Closer towards store launch, we'll be happy to share that officially. However, given the fact that we would like to be a well-trusted jeweler and establish ourselves well, we will be doing a strong policy that favors consumers most definitely.
Got it. And can you throw some light on the corporate advertisement expenditure for 25 and 26?
Right. Again, we will discuss that with our marketing team heads who are joining us this month, and we can get back to you closer towards the store launch date, which is Q3 of this year, of this financial year.
Okay, great. Okay. Yeah, thank you. Thank you so much.
Thanks, Bhavya.
Thank you. Next question comes from the line of Pradeep Rawat with Yogi Capital. Please go ahead.
Hi. Thank you for the opportunity again, sir. So my question was regarding the stores we are opening. So what kind of gross margins or EBITDA margins would we generate from these new stores?
Sure. Thank you, Mr. Pradeep. So we are targeting gross margins to be higher than our competition because we are in lab-grown jewelry. It will be in the range of high 30s or low 40s as a percentage. And EBITDA we aren't looking at the moment. That metric is related to gross margins.
Okay. Thank you. That's all from my side. Thank you.
Thank you, Pradeep.
Thank you. Ladies and gentlemen, that was the last question for today. We have reached the end of question and answer session. I would now like to hand the conference over to the management for closing comments.
Well, thank you everybody for joining in. I hope we have answered all your queries, and we look forward to more sessions with you in the future. And have a good weekend, and thank you all very much.
Thank you very much, and thank you to the Monarch team as well.
Thank you. On behalf of Monarch Networth Capital Limited, that concludes this conference. Thank you for joining us. You may now disconnect.